Hello guys, welcome to the Trading Parrot. We are seeing a breakout not just on the daily time frame but also on the weekly time frame, coming from many indicators that provide the strongest and more reliable signals that I use to time the market. We're going to look in detail one by one each of these breakouts that are currently confirmed. We will look into what the shorts are doing as a desperate measure to prevent the price to cross 65K. 65K is going to trigger the remaining part of the short squeeze, which is the most loaded area from shorts containing billions in liquidations. It's been an incredible battle, which we are going to look in detail, including what the whales are doing and the long-term holders as well. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And yes, guys, we continue to have over 150 likes in every single video. All thanks to you. I will really appreciate if you can give a like to this video. I'm back to work, back in UK. Let me know as well in the comments if you want me to review any altcoin. Now I have extra time to put out more content for you. Let's get into the content. Let's get started with the daily time frame. And as you can see, the triangle shape that we plot last week around Tuesday was really helpful to tell us where we could be heading next. First, we touched it as a resistance. We saw a rejection. Right after printing a higher low, we had this candle in here that confirmed the breakout. That was confluence with the RSI as well breaking out. And around Wednesday last week, I said that if we were to break above this triangle, that we were going to use as a cheating code to tell us in which direction are we going to go next. We say that we have quite a heavy loaded bottom end in terms of liquidity. 46 to 48 continues to be very heavy, but at the same time, we paid very strong attention to the range from 60K to 67. And what we said was that we had the perfect recipe for a short squeeze if we were to start hitting 63, because the higher we go, the larger the price for the liquidations. And that is perfect to continue sucking in the price in certain direction. All that needed to happen was to confirm that the breakout was going to be to the upside. We also say that the immediate liquidity that was below us was less than the one that was on the higher end. And for the price to go lower, it needed to do a longer trajectory into 53K, 52, grab the CME gap. And in fact, that was the argument for the price to continue going higher. In very short terms, the short squeeze. But today is Monday. Where are we with the CME gaps and the liquidation levels? We still have the liquidation level from 54.5 to 53.9. That is going to continue haunt us until we get rid of it. And sure, it might happen that it takes a long time before the price comes back and takes this gap. And you can tell that among all the CME gaps that we can see in this area in here of the past 6 months, the only one that hasn't been taken close to the current prices is 47.9. If we continue going back in time, we're gonna find one of the most popular CME gaps that we never closed, and I hope we never do, the one that got formed in March 2023. That gap is still there from 20 to 21K. We closed the 62K last week that we formed at the end of August. We still have two in the close proximity. We have one that got formed on Thursday, a very thin one at 60.7K. And from this weekend, the price will have to move just 1% to travel to 62.9 and take the one that got formed over the weekend. When it comes to the 4-hour time frame, the things that I'm observing is the formation of market cipher divergences. There are divergences pretty much from many different indicators, including RSI and MACD on the 4-hour time frame currently, and the price continues to travel within this channel, but with the caveat that this time it couldn't manage to get to the top of the channel like it did on 13th of September and on the 20th of September. And that is because we are approaching a very critical level. If we look at the monthly time frame, it's going to be much clearer why the price is reacting in such a way against 65K. In the monthly time frame, in the past 2 months, July and August, we have never been able to close above 64.7K. That level was also the first all-time high in April 2021. And you can see that in September, we are seeing a rejection so far from that level. But why is that? If we inspect into the liquidity, you're going to see that so far my argument from last week still stands. The higher we go, the more liquidity. And if you look at 65, you can tell that since the price has been approaching it in a slow way, now putting bearish divergences, which means that this impulsive move is less impulsive than this one that we saw against 63K. And during those moments, the traders start opening more short positions. From the 20th of September at 8 a.m., new positions have been opened, and if you monitor the liquidity at the top of the chart, you can see how it's increasing with time up until a moment where it gets very close to 1 million. And yes, those shorts are putting pressure against the price, but if the big whales continue to accumulate at a ratio below 1, that buying pressure could potentially mean that there is continuation for the short squeeze that we started seeing in the past week. So many people watch my video about the short squeeze, but it's one of the videos that has the most dislikes in the past month. And if you remember my previous videos, I state very clearly that every time that we have a controversial thesis in this channel, it tends to put people uncomfortable, lots of trolls in the channel, and that is the time where we have the highest chances to succeed. And I find that pattern very interesting. Certainly, it's got to do a lot more with psychology than with actual TA. And if we continue zooming out on trading different, discount in the description, you can see that the red turns into yellow because 70K continues to be higher than this. And if we include the area of 75K, it's even larger than 70K. So all we need to do in this case is continue monitoring that, number one, the big whales continue to be in a ratio below 1, which means that they are withdrawing more than depositing, and number two, that the long-term holders continue to buy. Since Wednesday, we started seeing that they are just going sideways. They are not selling yet. They could slow down the move to the upside. And to be honest, I totally get it why they are slowing down. Pretty much because we are approaching resistance. Number one, we have this resistance here at 65K. That was the one that the previous time threw us almost 20% to the downside. Some of them may be having some tough time believing that during a month of September, we can break above this 65K, confirm that the structure is broken, and that now we are heading to higher prices. Think about it. We put a lower low in here, then we put a high, and then we have a higher low. All we need next is to break this high and end up closing a daily candle above 65K. Once we do that, we have a bullish structure on the daily time frame, and we complete and break out above a W bottom formation, which are typical formations for a reversal to the upside. Not to mention that the high of this W formation puts us somewhere at the 77K. And let's have a look at the open interest. We've been talking for months about this pattern. We talk about this bounce at 15 billion. We say that every time that we go to the 15 billion in the past 6 months, pretty much we end up getting a nice ride to the top of the range, like in there, or here, or even at the beginning. The only exception was on the 11th of August, and now look at where we are. We have bounced, retest, broken above the second third. Now we are at the top of the range of the open interest, and just judging by previous past performance, if we were able to get the open interest at 20 to 21 billion, we need to be looking for a potential rejection at that point, which could become really painful. Think about this. When you get to those levels, you go back to 15 billion. Below 15 billion, so if this time we see a rejection at those levels, we need to be prepared again for some tough times. Those movements are the most painful ones in the range. Of course, if that happened from here and we see another rejection from the top of this range, prepare again for 50s or even sub 50s. But if we were finally able to break above it and hold it, then we get a new all-time high. And so far, the big whales and the long-term holders are not showing signs of distribution. And that is very exciting. As you can see, at this top, we were clearly distributing. At this top, we were also distributing with this peak in here. And the third time was there more recently when we had the Trump pump. We also have distribution above the MA. Now we are at very similar prices compared to this 65, but the difference is that we are not even above a ratio of 1. This means that the whales this time, if they were distributing like we can see in this move up in there, that is way less than what we saw here and nothing compared to the massive distribution that we saw at 73.5K. And let's talk about the weekly, because so many things have broken out bullish on the weekly time frame with confirmed candles that you don't want to miss that. Starting with the megaphone pattern that is almost completed with the last cherry on top of the cake. But we have done so much. We went to the bottom of the range, we hit the bull market support band, we got rejected, we try once again, we are above it. All we need to do in the next 2 or 3 weeks is to make a move of around 12% to get on the top of the megaphone pattern, hit these liquidation levels once they are completely smashed and they lose, I don't know how many billions are there at the moment, then that is the final fireworks that confirms that the short liquidation has taken out all the shorts out of the way and we are ready for price discovery and more upside. This week, we managed to get above the short-term holder realized price, which is something that is definitely needed in a bull market to turn it as support if we want to claim that there's still bull market left. The fear and greed index is in the neutral area. It's very clear the fair value gaps that are left at the top, but you can see how the shorts are trying to protect the top end of the range, starting with 65 that currently has 40 million trying to push the price lower, and at 70K we have 44 million approximately. Both of these short levels are way larger than the support that we have at 55, at 60K, and almost double the size that we have at 50K. Seeing this level of shorting at these levels is a very tough call because they might win the short term and push the price lower, potentially to close the first and maybe the second gap. I don't know if they can really make it to cause a dump to 53K straight from where we are, especially considering that right above the price here until 67K, there's so much liquidity to be taken that it will be really a shame for the market maker to start dumping so far away, leaving all this still on the plate. So my opinion about these shorting prices that you're seeing here is just a desperate last resource from the shorts to try to prevent the largest and most painful short squeeze that we have seen pretty much in over a year. I even think that some of them were writing hating comments down below when I was talking about a short squeeze. Some people were swearing at me when I say short squeeze. And the only reason I give to that is because you are in a short, you are in pain, and when you hear someone announcing that you're gonna get wrecked, probably doesn't feel great. We can also see the liquidation levels here on high block capital. It's very clear where is the highest liquidity. On all of these charts, 1 month, 6 months, and 1 year, you can tell clearly that the largest chunk is at the top of the range. Right now, the delta keeps the longs at a higher level of risk that can be very easily confirmed on CoinGlass if we look at the past 30 days. So many areas to liquidate longs at the moment, just looking at the past 30 days. Of course, prior to those 30 days, we have a lot of extra liquidity at the top end that we are able to track thanks to trading different. incredible news on the weekly. I'm gonna give you all this weekly news very quickly, but make no mistake, this is the part, if you were to watch this content 6 months from now, you're just gonna grab a stone and hit yourself in the face why I didn't see this on time. We finally have broken out and confirmed a full candle on 4 out of 4 spread charts, and I'm gonna show you one by one. Against the VIX volatility index is confirmed. Today is Monday. We have a green candle above the trend line. We have RSI closed candle above the trend line as well here on the lower end of the chart. What comes next? We should be expecting impulsive move like we did in here, like we did on this green line as well there, or going in the past here on the 8th of June or on 2018 right before this massive leg. Against the Fed, we also have a breakout, both confirmed, and for the first time in a very long time, we have a breakout on the Nasdaq as well. You can tell here that the candle has closed above the trend line on the RSI, not yet on the price. The price needs to get probably closer to 67K to see the full breakout against the Nasdaq as well. Against the dollar, we also have a breakout on the weekly. The price hasn't done it yet, but the RSI is confirming the breakout. I think this is pretty much influenced by the additional liquidity that is coming across the globe. What you can see here in yellow is the global liquidity index. You can also see a breakout on the liquidity from China, and this is a weekly time frame chart, and the RSI applied to the global liquidity index has also broken out, retest, and putting new higher lows and new higher highs. The only thing that is still pending is to see the liabilities of the Federal Reserve in quantitative easing mode. That is still not the case, as you can see here at the top. That tends to take a little bit longer, but eventually it's going to catch up with what the liquidity is doing as well. And if you are thinking altcoin season, we are getting also very close to it, starting with a rejection at the top of the range. We almost made it to 59%. We've been talking about that 60%, potentially sticking your head slightly higher in here, touching 60 and then dumping into an altcoin season. What we're seeing here is the Bitcoin dominance. Incredible news for the USDT dominance, which has broken down from this bear flag, now is resting on top of the 21 weekly MA and potentially heading down into this massive support provided by this trend line that has been support since 2018 on the USDT dominance. Any move from the top into the trend line means an altcoin season. It's been a long time that we don't look into Cerberus indicator. This indicator is magnificent for looking for tops and bottoms of the market. It analyzes all the stable coins against all the different coins, and it gave us a golden sell in this candle, and it's been printing buy all this range. Every time we put a low, it says buy, 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 and it never ever in history has done 4 buys in a row. If we look back in time, you can see that it has done up to 2 buys in a row, like in here, in this area here prior to COVID. Then during COVID, there were 2 buys in the middle of the previous bull market. We are now at 42, approaching the level of 81. Let's see if we had the actual breakout from this pattern. I'm pretty sure we will be seeing Cerberus at this area in there. If we were to print a golden sell, you will be the first one to get informed if you follow this channel. Remember that all the information that is time sensitive is currently going to my Twitter, Instagram, and now we have as well comments on my Telegram channel. Check them out in the description. Guys, I'm currently hosting a position airdrop on Bybit. You trade with $100 and they give you 500 additional to trade for free on any of the coins listed in this page. Open a new account on Bybit and you can claim up to 30,000 in rewards if you use my referral link in the description. Connect your new Bybit account to my website and then you don't have to pay anything for memberships to get access to all my collection of 100 indicators and advanced trading bot tools. If you want to learn more about that, make sure that you're part of our Discord community. Head straight into the strategies. I'll see you there.